everybody. My name is Moritz Bierling. Thanks for the introduction. I'm the blockchain reporter at Neufund, and you can tweet my talk or at me at Bierling on Twitter. And I'm going to be talking about bridging the worlds of blockchain and venture capital. Now, Ryan has already alluded a bit to how blockchain can make incentives for farmers to share data. What we're talking about here is bringing an existing industry onto a new technology and thereby making the whole processes more effective, cheaper, and actually making it more democratically available as well. So first, who here knows of Bitcoin? Who here has heard of Bitcoin? Hands up. All right, that's quite a few. Very good. Who here has actually owned some Bitcoin? All right, so we've got maybe 30%, 20%. That's pretty good. But do you know actually where Bitcoin comes from? So Bitcoin actually was invented in 2008, published in a white paper in a cypherpunk mailing list, right around the time that the financial crisis hit. And about 3 months later, it was actually implemented in software and then distributed to people who wanted to participate in it. And the timing here is interesting because at the same time as the global financial system melted down, a new type of technology was born to take over the role of that financial system. And the interesting thing is it really is kind of a self-sufficient financial system that makes it possible for individuals to transact money or value from one to the other without having to go through an authority or ask permission. And you can see here the regular financial system, how it works. We have one person, you have banks, you have the second person, and you actually have to use the bank to transact value from one to the next. You can't really do it directly unless you actually do it in physical space with cash. And when you do it digitally, you have to use their technology, you have to trust them to use your money correctly, and they can also do other things with it, lend it out, have all these credit inflation and these things, which then lead to these global meltdowns. Now, Bitcoin kind of leapfrogs that whole process and just takes you and your computer, you have your wallet on that computer, and then you can send financial transactions from yourself to the other person without having to ask permission from somebody or trust somebody with your money. And that, of course, is quite revolutionary. Now, I should say here that Bitcoin and all the financial applications are really just a small part of the overall blockchain world. They were the first one to be implemented because the industry itself, of course, is a very high-value industry, and so small transaction costs or small adoption costs really don't make that much of a difference. But there's a whole host of other industries out there, like identity, logistics, law, Internet of Things, medical records, storage, all these different things that are going to be impacted by blockchain and its proliferation. And so understanding that really gives you an idea of Bitcoin is not just blockchain. Blockchain is much larger than Bitcoin itself. And there's actually one of the most successful VC firms in the world, Andreessen Horowitz. Their investment thesis is called "Software is eating the world." Why? Because they have seen that the internet itself, as a transformational technology, has changed business models and industries and made it more possible to have individuals transacting directly instead of having to go through intermediaries. And the change of that, of course, we see in companies like Airbnb, Uber, etc. Just think about what they're doing. They're taking the hotellerie industry or the transportation industry and just giving you a piece of technology that you can use to interact directly with another service provider instead of having to go to a company. Then it should also be interesting to you that the same person or the same institute actually thinks that blockchain is going to be the most important technology since the rise of the internet. So Andreessen himself says that this is going to be taking place, and one of the first industries to really fall prey to it or be infused by it, I should say, is actually venture capital. And we're going to take a look at now how venture capital works and how blockchain is changing it concretely. So you have, on the very basic level of venture capital or any kind of company creation, you have two sides of the market. You have the people with money, and you have the people with ideas or business plans. And you could even make the case that there's a third category, the contributors who make it possible for a company to grow, etc. But I'm just going to focus on these two. You'd think that the transaction here should be relatively simple, right? You have two consenting parties that want to make a transaction, money from one to the other, and shares from the other to the first. But actually, there are a few facilitators or middlemen that are inserting themselves into the middle of that. Now, so far, they have always fulfilled a valuable role facilitating this trade that would otherwise not be possible. We have banks, venture capitalists, notaries, laws, the legal system. All of these make it possible for these two parties to interact at the current moment. Now, what blockchain does, it kind of makes them all go away. At least that's what the techno-utopians say. Us here at Neufund, and myself personally as well, we don't think that it will be that dramatic. We more think that the whole parties in this transaction are going to be, or these industries are going to be shrinking in size, that the people who are working in them will have other tasks, and a lot of their functions will be outsourced to software or to the technology itself. But let's take a look at what the fundraising process looks like from the startup's perspective. What do they have to do, and what changes when they go about this a different way? Currently, you have a very long, laborious, and expensive process, both in terms of money and in terms of financial expenses. You have anywhere between 6 and 7 months, perhaps longer, of this kind of flirting phase with investors where you have to cozy up to them, pitch them, and then get their agreements in the last month or so. And that whole phase then is also expensive. And so there's a lot of effort involved in making this transaction happen. And it would be cool, of course, to drastically shorten that and just approach these people directly and get the money a different way. But you have to go through all those hoops to actually make sure you get it and that other people don't get the capital that you're trying to vie for. It's really an inefficient market in a way, because you have, on the one hand, the investors that are locking their capital in one venture, not able to withdraw it at will, and so most of the ventures fail, and so they have a lot of risk involved here. At the same time, on the other hand, you have the startups that are forced to structure their business model in such a way that they are attractive to these venture capitalists, and so promise a very high return on investment that they often then cannot fulfill because they are scaling so quickly that their business model breaks or somebody else gets in the way. And so a lot of this failure is kind of just built into this model of raising funds. And overall, it's just a very high transaction cost. Now, there's a new game in town. Who here has heard of ICOs? Oh, fewer, okay. So ICOs are modeled after the IPO, what everybody should know, initial public offering. ICOs are called initial coin offerings, and they are made possible by cryptocurrency and digital currency. And you see here a couple of these ventures that are already old. So the recent numbers of some of the more successful ones are actually $150 million, $200 million in days or hours. So it's incredible how much money is being raised currently. We're, of course, experiencing also a bubble because this technology is so new. Nobody has very good objective metrics to evaluate a project. And so a lot of FOMO dynamics, fear of missing out dynamics, are taking place. Now, what we're doing is, at Neufund, we are opening the ICO process for all ventures, not just blockchain ventures. At the moment, it's the case that only blockchain platforms are using this technology to give out tokens to people that are giving them money, and then those tokens will be valuable on the platform later on. What we're doing is we're making this accessible to all startups, companies, regardless of their industry. It could be biotech, it could be transportation, it could even be just a regular business that wants to share their equity and is not really a startup. And how are we doing this? Well, we're bringing the whole investment process that already exists offline onto the blockchain and making it work. So last year we raised 2 million euros to fund our development and are currently building the platform. And now we are going to be doing something like this. I've already told you about the IPO, so it's really nothing new. You have these two sides to the stock market in a sense. You have the individual investors and the funds, and then you have the startup on the other side. And they give out the shares, they give the money, and everybody's happy. With these ICOs, the unicorns here that you wonderfully see on the right-hand side, they do the same thing, just on the blockchain, and there's not really much of a difference in terms of the process, just the technology involved. The market we are looking at here is actually quite huge. If you look at the existing cryptocurrency market, we have around 100 billion, depending on where you're at right now, because it's very volatile. But you also have then private equity, a $5 trillion industry, or even public equity, a $70 trillion industry. So all of these are open to being disrupted by this technology, and we're going after them. So the platform itself looks something like this. Remember that what I showed you earlier, you have to identify a need and then raise the funds, that whole transaction process from we need money and go through this cozying up to investors, etc. This is what it looks like on our platform. So you identify the need that you need the money, then you say, okay, we're going to do an ICO. That decision has to be made, and then you come to our platform. And then all these different steps take place in between having decided that and actually executing that ICO. You have to be educated by us how the technology works, because there are some things that are not very self-explanatory. You have to go through a login process, we have to verify your identity, we have to show you how to use the interface, all of that stuff. And then you also have to change your bylaws in a way that makes it possible to be compatible with our system. Once you then actually raise the money, that's where it gets interesting. The thing where we are innovating over the existing ICO process is the integration with the legal system as it exists today. What we're doing is we're integrating smart contracts, which are this new technology in the cloud or in the blockchain. We're integrating them with existing regular legal contracts that are enforceable in court, and thereby kind of give these objective metrics back to the community to evaluate things and to enforce the promises that founders make to people that they get money from. Once you've done your ICO and you're successful, you have the platform itself where you have your funds on a token that is pegged to the euro. So you have your funds on that platform and you can withdraw them as you need. And then you also have an equity management tool that allows you to do e-voting, to give out dividends to your shareholders, etc. And if you're successful, at the end, you might end up somewhere here on a list like this on our platform and see yourself successfully among the other startups or ventures that have raised money in the same way. One thing I want to mention before I sign off is we have been launching a regulatory initiative on the European level to try and help the regulators understand how this technology works, how to regulate it maybe in a way that doesn't kill innovation. And so we have kind of gathered behind us a whole group of signatories, Melonport, Kraken, many of these industry players. And we are inviting everybody in the financial, blockchain, and startup industry to join us in this initiative and to work on making this technology proliferate in a good way. And if you are interested in that, please reach out to us in the following ways. And thanks for listening.
So we have about a few minutes for like 1 or 2 questions. You raise your hand first. Please catch, don't drop, and then speak right into it.
Hi. I'd be interested how you solve the problem of me as a startup having to pay my employees and the rent and everything in euros. So you would have to act as a bank at one point, wouldn't you, to change my coins into actual euros and back?
That's what the newer token that is on this slide. Can I go back, or can I show the slides again? Doesn't matter. But okay. So you have this token on the platform that is pegged to the euro. So once you've raised your funds on the platform, then you can withdraw them into your bank account directly. So
and there's no currency exchange loss involved?
No.
It's always the euro, basically, one-to-one?
Yes, it's always pegged one-to-one, yes.
Okay.
Another question? You could throw it over here. Maybe throw it to someone else in between. It's still okay.
How much do you charge? What's your fee?
We are still deciding that. We have an idea around 3 to 5%, and we are building the economic model in a way that actually makes it. And it incentivizes to people to join up and to also share in some of the revenues of the ICOs that are launched on our platform. So if you're interested in the economic model of this, which I did not have the time to go into, you will have to look at our white paper later on, or just reach out to us and we'll be happy to explain it to you.
Who's paying? The VC or the startup?
Who's what? The startups that are raising the funds, yeah.
One last question. Anyone? Anyone? Last question. Going once. Going twice. Oh, wait and oh. All right, this is going to help a few times if y'all can pass it to him. So who's going to catch it over here? Can you pass it back? Throw it.
Can you hear me? Oh, there you go. You mentioned shareholders, right? But if people are buying tokens, they're not actually shareholders. And if you talk about shares, then aren't you getting into the whole regulation system of stocks and bonds, which is like a different thing? Like, how is this going to deal with the sort of official regulatory systems that exist and look for stuff like this?
Well, what we're doing is basically we're just using a technology to onboard the shares onto the blockchain. So it's not really, we're not doing something that is kind of going to all the security stuff and making it difficult for us to work with the regulators. We're actually talking with them directly to figure out what is going to be going down. But if you need to have more information on that from the legal side, I'd suggest you to talk with our lawyers, because we have a very good legal team that is trying to make sure that everything works out there. Thanks.
Okay, there was one last question to the guy on the right. Please throw it to him. All the way over, keep going. There we go, perfect.
Can you hear me?
Yes.
Cool. My question goes into more like, one of the main incentives for people investing in ICOs at the moment is that they actually predict or hope for an increase in value. So how does that relate to your system of issuing coins or tokens which are basically pegged to the euro, so they will basically not rise in value, or how does it work?
Well, we actually have two tokens on the platform. We have the Euro token, which is just a peg to the euro, so that we are able to always guarantee the funds we have on the platform are equivalent to the ones we have in our bank accounts, so that we can withdraw them to the other startups. And then we have something that's called the Neumark, which I cannot possibly go into and lose everybody. But that is kind of the platform token that we're using to incentivize people to sign up, to go there and do the ICOs with us. But we agree, the current ICO startup craze is not sustainable. We're seeing that Ethereum right now is again crashing. And so we actually want to make sure that these ICOs are not tainting the overall space by giving people objective metrics and the legal enforcement that will allow them to trust that something they're putting money in is actually going to be carried through.
Thank you very much. Everyone give a hand clap, please.